The great enemy of the truth is very often not the lie, deliberate, contrived, and dishonest, but the myth, persistent, persuasive, and unrealistic. Too often we hold fast to the cliches of our forebears. We subject all facts to a prefabricated set of interpretations. We enjoy the comfort of opinion without the discomfort of thought. There are three great areas of our domestic affairs in which today there is a danger that illusion may prevent effective action. They are, first, the question of the size and the shape of government's responsibilities. Secondly, the question of public fiscal policy. And third, the matter of confidence. Business confidence, or public confidence, or simply confidence in America. It is true that in recent history, each new administration has spent much more money than its predecessor. Thus, President Roosevelt outspent President Hoover, and with allowances for the special case of the Second World War, President Truman outspent President Roosevelt. Just to prove that this was not a partisan matter, President Eisenhower then outspent President Truman by the handsome figure of $182 billion. It is even possible, some think, that this trend may continue. But does it follow from this that big government is growing relatively bigger? It does not. For the fact is, for the last 15 years, the federal government, and also the federal debt, and also the federal bureaucracy have grown less rapidly than the economy as a whole. If we leave defense and space expenditures aside, the federal government, since the Second World War, has expanded less than any other major section of our national life, less than industry, less than commerce, less than agriculture, less than higher education, and very much less than the noise about big government. The truth about big government is the truth about any great activity. It is complex. Few people realize that in 1961, in support of all university research in science and medicine, $3 out of every 4 came from the federal government. Each case, science, urban renewal, agriculture, natural resources, each case must be determined on its merits if we are to profit from our unrivaled ability to combine the strength of public and private purpose. The administrative budget has sound administrative uses, but for wider purposes, it is less helpful. It omits our special trust funds and the effect that they have on our economy. It neglects changes in assets or inventories. It cannot tell a loan from a straight expenditure. And worst of all, it cannot distinguish between operating expenditures and long-term investments. This budget, in relation to the great problems of federal fiscal policy, which are basic to our country in 1962, is not simply irrelevant, it can be actively misleading. And yet there is a mythology that measures all of our national soundness or unsoundness on the single, simple basis of this same annual administrative budget. If our federal budget is to serve not the debate, but the country, we must find ways of clarifying this area of discourse. The myth persists that federal deficits create inflation and budget surpluses prevent it. Yet sizable budget surpluses after the war did not prevent inflation, and persistent deficits for the last several years have not upset our basic price stability. Obviously, deficits are sometimes dangerous, and so are surpluses. But honest assessment plainly requires a more sophisticated view than the old and automatic cliche that deficits automatically bring inflation. Moreover, debts, public and private, are neither good nor bad in and of themselves. Borrowing can lead to overextension and collapse, but it can also lead to expansion and strength. There is no single, simple slogan in this field that we can trust. The solid ground of mutual confidence is the necessary partnership of government with all of the sectors of our society in the steady quest for economic progress. We cannot understand and attack our contemporary problems in 1962 if we are bound by traditional labels and worn-out slogans of an earlier era. But the unfortunate fact of the matter is that our rhetoric has not kept pace with the speed of social and economic change. Our political debate, our public discourse on current domestic and economic issues too often bears little or no relation to the actual problems the United States faces. What is at stake in our economic decisions today is not some grand warfare of rival ideologies which will sweep the country with passion, but the practical management of a modern economy. The national interest lies in high employment and steady expansion of output and stable prices and a strong dollar. Let me end by suggesting a few of the real questions on our national agenda. How can our budget and tax policies supply adequate revenues and preserve our balance of payment position without slowing up our economic growth? How are we to set our interest rates and regulate the flow of money in ways which will stimulate the economy at home without weakening the dollar abroad? Given the spectrum of our domestic and international responsibilities, what should be the mix between fiscal and monetary policy? How can we develop and sustain strong and stable world markets for basic commodities without unfairness to the consumer and without undue stimulus to the producer? How can we generate the buying power which can consume what we produce on our farms and in our factories? How can we take advantage of the miracles of automation with the great demand that it will put upon high-skilled labor and yet offer employment to the 500,000 of unskilled school dropouts every year who enter the labor market, 8 million of them in the 1960s? How do we eradicate the barriers which separate substantial minorities of our citizens from access to education and employment on equal terms with the rest? How, in sum, can we make our free economy work at full capacity? That is, provide adequate profits for enterprise and adequate wages for labor and adequate utilization of plant and opportunity for all. What matters is the capacity of the nation as a whole to deal with its economic problems and its opportunities.